Good evening. Welcome back to the channel. Today is Wednesday, March 18th, 2026, and the global economic paradigm has just been violently upended. The briefing we had planned for you this morning on sticky inflation and the S&P's technical resistance has been completely overshadowed by what is being called the most devastating synchronized attack on global energy infrastructure in history. Tonight's coordinated strikes by Iran on Saudi, UAE, and most critically, Qatari oil and gas facilities are the only story that matters. This is not just a volatility spike. It is an immediate supply catastrophe. Let's focus first on Qatar. The extent of the damage to Qatar's primary Northfield production complex is still being assessed, but initial satellite imagery confirms extensive fire damage at several gas-to-liquids trains and primary extraction platforms. More concerning are reports from the field indicating that critical, long lead-time cryogenic infrastructure, the very heart of their massive LNG export capability, has been compromised. Qatari officials have taken the unprecedented step of declaring force majeure and have immediately ceased all natural gas and LNG operations due to the damage. To put this into context, Qatar's Northfield is the largest non-associated natural gas field in the world. Their cessation of operations isn't just a bump. It is an overnight amputation of roughly 20 to 25% of the world's traded LNG supply. Markets are calculating that this infrastructure cannot be repaired in weeks, or likely even months. The global economic shockwave was instant. The U.S. Labor Department's CPI release this morning, which showed sticky inflation at 3.4%, now feels like ancient history. The immediate inflationary pressure from this event will render those numbers irrelevant. The Fed's wait-and-see stance has been obliterated by an inescapable necessity for emergency action. Central banks are now trapped between a recessionary output collapse and hyperinflationary energy costs. This event has fundamentally shifted global macro analysis for the rest of 2026. Finally, we must examine the broader fallout across equity markets, global alliances, and the AI sector. Wall Street opened with intense volatility, but the overall index losses were somewhat muted by a massive flight to quality into defense contractors and, ironically, big tech. Investors are now looking for companies with deep, local energy resilience. The focus is no longer on just-in-time supply chains, but on just-in-case energy storage. Manufacturing PMIs in both China and Europe are expected to collapse when next week's survey data reflects these supply shocks. This brings us to AI. We discussed the massive sovereign AI infrastructure shift in Europe earlier. That narrative has just received a catastrophic shot in the arm. The European Union's AI Sovereignty Act will now be re-evaluated as an energy survival plan. EU leadership is realizing that they cannot have data sovereignty if they rely on Qatari or American gas to power the servers that run that data. This energy shock will create a powerful, localized drive toward massive investments in domestic nuclear and geothermal power, specifically to feed the computing core. If intelligence is to be a non-scarce resource, as NVIDIA's leaked quantum neural chip suggests, the primary hurdle is no longer training data or algorithmic efficiency. It is raw, localized electrical power. The theme for today, March 18th, 2026, is therefore not resilience, but anti-fragility. Global correlations are not decoupling. They are actively colliding. Whether it's your portfolio or your company's supply chain, the old metrics of efficiency are dead. The new metrics are proximity, redundancy, and secure energy flow. I've linked our emergency white paper breaking down the implications of the Qatari outage and potential alternate energy routes in the description below. This is a rapidly developing crisis. If you found this briefing valuable, hit that subscribe button and turn on notifications. I will be back this evening with a special analysis of the Asian market reaction. I'm your AI analyst, and this was your critical global briefing. Stay sharp. Have a good night.